Yo, 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 yo. Welcome back to another CMT Lunch Hour. I will be your host, Larry Thompson, resident CMT here for the StockTwits community. We'll be talking to the market today, right? Should I be taking down my little bear statue I have up there, right? Seems like the bulls are dominating the tape. And so we'll get into it, right? We'll kind of break down the markets, share your ticker request in the chat, right? Get the chat going. We'll start sharing some information with you guys. This is kind of what we'll be going over today, right? So first thing is the S&P 500, right? The focus of most people's investment strategy is the S&P 500. It is the largest market in the world by 3, 5, even 10 times, right? I believe that U.S. stock market is 10 times larger than most, right? Which shrunk this week, right? So we'll be talking about that Glass Joe. Let me know in the chat if you guys get that reference. The S&P 500 right now is Glass Joe, right? We'll also take a look at the Mag 7, review those larger names. I know people tend to like those names. We'll take a look, see if there's anything to take a stab at, or if we should just be waiting this out, right? The next piece is the CMT lesson. Technicals work, guys, right? So if you've been in this market or you've been following my content, right? I took last week off, was in Mexico, but the week before, we kind of talked about how messy the market was. Did I say, hey, Trump's going to come out and the market's going to crash 2 days in a row? No. But was I saying to reduce risk? Sure. Was I saying that there wasn't a lot of good trades out there? Sure. Right? So that's kind of the thing here we want to review is, hey, what lessons can be learned from what just occurred in the market? That way we're prepared next time we get that up leg in the market, right? So you should be doing some reflecting and some learning, not just out here blasting trades 24/7 because right now you might be stuck if you didn't have a plan going into what was occurring. So we'll take a look at that. And then lastly, chat, I see it's already kind of buzzing. We'll take chart requests. So if anyone is still in the market, right, still looking for setups, looking for opportunities, thinking this is a capitulation event, we'll take a look at that. So that's kind of what we'll review here today. So let's get into it, right? Let's get into some of these charts and get into some of the topics I want to cover. So first thing we're looking at here, right, is the S&P 500 is zoomed in, right? So this chart starts back in late February, right? So a couple things I want to note here about late February. That's when the market started to correct, right? We made a fake new high right around 608. And then we started breaking down, and the real fight for the market began when we started getting closes below the 5-day EMA. So this is a 65-minute chart. The market's fractal in nature, right? Which means when you zoom in, right, it's like those little Russian dolls. It's the same thing inside of itself. So if I pull this chart out, right, it's the composition of what's on the shorter term time frame. So same exact concept. And so here we're looking at 65-minute candles, 6 a day. Right, you take that and you times that by 5, you get 30 periods, and that's how you get the 5-day EMA. Nothing too fancy there. But what you see here is I called the market Glass Joe because if you ever played Mike Tyson's Punch-Out, the first guy you fight in Mike Tyson's Punch-Out is Glass Joe. Glass Joe does not keep his hands up. Glass Joe cannot take a punch, right? So that's what the market was doing, right? The market was telling us, hey, I can't take a punch right now. My hands are not up. I'm not even protecting myself. All I'm really doing is getting off the canvas. But you get knocked down once, get up. Okay, get knocked down again, you get up. Okay, that third punch that was thrown was the day Trump announced the tariffs, right? Coincidence? Sure, I don't know, right? But we know there was uncertainty before that. We know we were in a downtrend before that. And that was a punch that set the market below that 545 level. We didn't get up off the canvas, and we haven't yet. And so these are the things where you can have a longer term view, which we'll talk through. But when you zoom into the market, the tape tells you a lot. Price structure tells you a lot beforehand. And price was telling you since late February, guys, that the market didn't have its hands up. It wasn't ready to take a punch. RSI was staying in the bearish regime, right? That's a form of momentum. The bulls were controlling momentum, right? We started to get this little rally here, but we didn't really get overbought. We didn't really make any strides. There wasn't that many days up in a row. And we didn't see any price action that confirmed, hey, we're back on our feet and we're ready to box, right? Because what you want to see is once we have that up leg, you want to see the market be able to take a punch without getting back oversold. But we weren't able to, right? We took another punch, got oversold again. Took another punch, and that was the final blow, right, for this leg, right? So now if you weren't zooming in, you weren't managing risk, you're probably stuck, which I feel for that. But we'll look into some levels that we've highlighted in the past to kind of understand. But right now the market's Glass Joe. I don't want to be putting my money on Glass Joe because the bulls have control of the tape and they're winning the fight. So zooming out here, right, I want to just show you guys why we use technical analysis, right? It's not voodoo. It's not just chart patterns. It's price action and the market participants giving you information of how they're viewing the market and what they're doing with their money, right? So this chart goes back to late February, right? See, we had this little breakout here, but look, it was a slap chop zone. We've talked about this slap chop zone before. And these levels that we were highlighting here, these levels indicated that this was a consolidation within the terms of an uptrend. And so sure, you were giving weight of the evidence to the upside, but you had your levels, right? We got back below 610, probably shouldn't be adding to your longs yet. We get below 580, probably taking off some of your longs because this might be turning into a distribution pattern. And that's what we had, right? This was 2 weeks ago, right? We got below 580. Okay, we got below those risk management levels. And I've written, guys, you can go to my Beehive. I read an article. It's called It's About Respect. It's about respecting yourself when you break down below these levels, right? Because if you trust your process, you'll trust the fact that you can get back into the market, guys. We can get back in and see what's occurring in the price action. So those are some of the things I wanted to talk through. So look, where are we at today? Okay, right? A lot's happened in the past 2 weeks since I've been gone. Right? So let's break down this chart. Okay, so maybe you didn't get out of the market. We're still above the 200-day. Well, look, we broke below the 200-day. We broke below 560. What happened? We rallied back to that 200-day and we tested it from the underside and got rejected. RSI failed at 50. So at this point, the only reason you're in the market is because you're very, very, very long-term. You're not a tactical trader, right? Or you have hope. And emotion should not be involved with the investing process from that perspective, right? I have emotions, right? I want the market to go up. I want people to succeed. But once we break these levels, I'm trying to protect my capital and my money. So that's what I kind of wanted to highlight here is you got to respect these risk management levels. We broke back below 560 and then it was all hell broke loose from there. Right now we're testing this 520 level, right? Making new 9-month lows. We're like 4% from making new 52-week lows, right? So just wanted to highlight to you guys that the price action was developing along the way for this to occur. Chat, I see you guys are throwing some tickers, and I will share those charts here in a bit. Right now, I just kind of want to run through a couple things because reality is if you're taking a lot of trades right now, you're either an expert or a dummy, right? Or probably a little bit of both. So just you should be zooming out a little bit and just understanding these risk levels at the moment, right? Next chart I want to look at, right? Qs, right? Same exact thing. Right? We had this sideways pattern. Looked like it broke out, but it failed to break out. What happens when we had that failed breakout? Fast breakdown. Right? This fast breakdown led to this bear flag, which led to, okay, a little upwards price momentum, but that failed. So then we broke back below the 200-day. You could have gotten out multiple times. Price, a lot of times, is actually pretty nice to us, right? On a larger time frame. It gave us plenty of warning to get out of the market before we had this next collapse. And so that's where these processes of risk management and understanding the market don't sound sexy on the way up, but when you draw your levels on the way up, you know where to manage risk on the way down. And that's what we're really here to do, right? We're here to make money when the hay's shining, and then when it's not, take a breather, right? Take a break, go enjoy life. It's spring right now. There's flowers blooming. You know, weather's changing, tans are made in this type of weather, right? Golf swings are improved in this type of weather. So that's what I think we want to be doing here, guys. It's just taking a step back, letting the kind of price action come to us. Bitcoin. Everyone wants to kind of talk about Bitcoin and kind of its relative strength here. I'm not buying it, right? It's still in this torture chamber. So cool, you what have you done? You've taken your money from the Qs and S&P 500 and moved it to Bitcoin, and you're up, you know, on a relative basis, a decent amount. But guess what's up more than this? Cash, right? Cash is doing better than this, right? Cash is doing just fine. Bonds are doing just fine. So I don't I think when the weight of the evidence is kind of weighed one area, it's easy to over hypotheticalize and theorize about, well, the fact that Bitcoin's holding up, does that mean that Bitcoin is now no longer a software asset? Does that mean that Bitcoin is, it can't get taxed by tariffs? Is this really digital gold? Like, just shut up, right? We don't know. All we know is it's held up for a couple days better, but it looks like a bear flag to me. So resolution higher here is probably hope, which is fine, right? A lot of people have made a lot of money, but I would just let it prove it to me. So right now it's in this hell in the cell torture chamber. Shout out to people who grew up with wrestling, right? Shawn Michaels, Undertaker, I believe they had a famous hell in the cell match, but it's in this torture chamber, right? So people are just getting tortured here. So I have really no interest in this until, right, we continue to see upside resolution. RSI is kind of staying below that 50. It's kind of in this no man's land torture chamber. So not really something I'm interested in at the moment. Next thing I want to take a look at, guys, is how technicals work, right? One of the things I wanted to mention at the beginning of this show is that technicals work, right? They give you information. It's not about, right, the perfect price pattern, being able to buy stocks right at the perfect time. It's about giving you information to then put probabilities in your favor in order to succeed over the long term. And so one of the ways we can do that is breadth analysis. So looking at the percent of stocks above a 200-day, looking at stocks above a 50-day, a 20-day, whatever your time frame is. But one of the famous things most people are familiar with is the 200-day, right? And the famous saying around the 200-day is nothing good happens below the 200-day. Okay, so let's just think logically here. If nothing good happens below the 200-day, right? In theory, nothing good. And coming into this year, stocks, right, were making new lows when it comes to percent above their 200-day, and then they made a false top and then corrected. And then going into the Trump presser 2 days ago, the percentage stocks above their 200-day were like 40%, 30%, 25%. So the majority of stocks in the S&P 500 and 1500, which is the combination of these three, 500, 400, 600, 1500, shout out to math. If the majority of stocks in the S&P 1500 were below their 200-day, right? 2 out of every 3 were below their 200-day. And you are expecting the news to be good. When Price was telling us your expectations of good news shouldn't probably be there because Price is already telling us that, hey, we don't think it's good, right? Price was a leading indicator of this, right? It didn't predict it, but it told you not to be just out here gambling on tariffs, right? Because what happened? We had follow through to the downside. And we had confirmation that Price was giving us the information we needed. High beta, low vol, right? High beta top panel, low volatility bottom panel, right? High beta stocks, think large growth, think Bitcoin to a degree, think Palantir, AppLovin, those high growth names, right? Think about low volatility, boring businesses, right? Utilities, sometimes a decent amount of financials, some industrials, some like cash flow companies that don't have great growth rates, right? They tend to trade when the market corrects, they go down less than the S&P 500. The top panel, when the market corrects, they go down more, and also they go up more, right? So there's a larger dispersion. But you look at this ratio started to correct at the beginning of the year, right? We were teetering, right? So we were teetering here, right? You didn't necessarily get out of the market, but hey, they were saying, hey, people are kind of taking risk off the table. And so we have this ratio, we have the percentage of stocks above their 200-day, we have, look, equal weight consumer discretionary versus equal weight consumer staples, right? This started correcting at the beginning of the year, right? That new high that we made in February wasn't being confirmed underneath the surface. That's the S&P 500 lying to us, right? Because the S&P 500 has a bunch of large stocks in it and it's pretty concentrated, but underneath the surface, we had this information due to technicals to be able to see, hey, things are struggling here, right? And so I just want you guys to understand that there's going to be people today, this week, next week, hey, are we getting close to a bottom? Are we making a bottom? And what they're never going to do is reflect on what just happened and what they can learn from it. Because that's not as fun. It's not as fun to take a look back and say, I want to make more money now. And you become a prisoner to chasing what's next instead of actually becoming a pragmatic practitioner of a field of study that can help you make money next cycle, right? So these are the lessons you want to learn, and these are the ratios and risk parameters you want to understand to de-lever some risk into the market, right? We'll get into what I think capitulation looks like, but I just want to kind of review with you guys that technicals matter and that they serve a purpose outside of just some voodoo chart patterns that you might see every now and then. There's a formative practice here with robust back testing and robust returns over periods of time that give us proof that this thing's work. And this market was no exception. Look at S&P 500 versus home builders and home construction and semiconductors, right? Home builders started to correct, right? September, October last year, right? They started to correct. Look, semiconductors didn't make a new high since July of last year, right? Those are economically sensitive areas of the market. Home builders, home construction, and semis, right? They never confirmed the new highs in the S&P 500 this entire year, right? So they were giving us warning that underneath the surface, things were wrong. Things didn't look great. And so, once again, beating a dead horse here, but the technicals worked. So let's kind of dig into some other things. Let's talk about capitulation, right? When is the market going to bottom, right? So that's something people want to know. And if you look at this, I wrote about this a couple days ago, right? I want this to be a capitulatory event as much as the next guy. But price has to stop falling. Haven't had that yet. We need to see follow through. So we need to see like a fake breakdown, false breakdown, and then follow through to the upside. And then, like we talked about, the market's currently glass Joe. It can't take a punch. Then we need to be able to take a punch without getting knocked back down to the canvas, right? We need to be able to take a punch, have a down day that turns into a higher low, right? That's not all going to happen today. So chill out, right? Like take a step back and just unpack the market and try to understand where risk is and where things are coming from. So that's kind of my little spiel, guys. We'll talk about some capitulation charts here in a minute. So let's kind of dig into that. Let's kind of look at what I'm looking at in terms of is the market capitulating or not, because I kind of want to figure that out and kind of help you guys kind of figure it out. So a lot of times when it comes to capitulation events, what you want to look for is there's normally a plethora of information. It's not just one indicator, one chart that's typically going to tell this to you. So I will share this chart with you guys and we'll kind of dig in. So taking a look here, right? So you have the NASDAQ new highs minus new lows and NASDAQ new highs on top, new lows on bottom, right? So what did we see here, right? We saw yesterday, right, expansion in new lows in the market, right? So that is one of the steps in a capitulation process is seeing new lows kind of correct very sharply and really expand to the upside, and then seeing them make lower highs, right? Seeing this kind of break down a little bit where we have less new lows and less new lows and less new lows. That's step one. Well, just yesterday we had an expansion in new lows. So for us to bottom, it's probably not going to happen overnight because, right, new lows just peaked yesterday. It normally will take time after that occurs, right? Same thing with the NYSE, right? We're getting closer, right? We almost had 500 new lows in the NYSE yesterday. And so we're going to have even more today. So what we see here is that we have this expansion in new lows, and then we want to see, right, from expansion, we want to see those then from the upside kind of stop, right? So not that complicated of a concept, but we're getting closer, right? So this isn't the point where we already should have been out of the market. This isn't the point where I'm trying to still get, like I'm already out of the market, right? I'm not adding yet. I'm waiting for these things to kind of follow through to the upside. Another thing, right? S&P 500 new highs minus new lows. Chop fest, right? Sideways for the past period of time, which we talked about on the show before. And that's where we had this mess in the market. And we had expansion and new lows yesterday. So we're seeing people get out of the market, but we're not seeing people give up on the market yet, right? We haven't had complete capitulation. VIX is sitting here around 40, normally a sign of capitulatory event. So I think at this point, we're getting close to that capitulation sign in the market, right? VIX is just a fear. You can look at it fear, but what it does is it takes 30-day out options and kind of prices the future contract on that. It's a little bit complicated, but essentially, are people buying puts, right, 30 days out? And people are, right, like people are fearful in this type of market environment, which we've seen a spike in, which we hadn't seen really, right? So this spike to 40 is a good sign, but what do we need to see? We need to see it revert back lower because it can keep going. So you don't want to catch a falling knife. You want to pick it up after it hits the ground. So we want to see this hit the ground and then reverse back before we get too centered around this capitulatory action in the market, because I just think it might take time. Let's kind of just zoom in here, take a look right back at the S&P, right? Here's another chart we could take a look at, right? And then I'll kind of get into some chart requests. But see, this 520 area is where, right, we need to get back above 520 for me to think there's anything that can kind of follow through in this market, right? But I would say we're looking like we're getting closer to capitulation based on this chart, and I'll kind of highlight that here now. So one of the reasons I think we're getting closer to capitulation is we have RSI oversold again, right? One of the worst oversold readings we've had this year, right? We also have percent of stocks above a 20-day moving average, making it's at 11%. But my buy signal will be when we see this reverse, right? You can see here it's been a pretty good buy signal when you get below that level, but then you reverse back above it. So think about it this way, right? The market going down is bad, right? The market going down really quickly has the potential to be good because it means, right, there's capitulation. But the sign that it's really good is when the market goes down really, really quickly and then reverses. So we need to see that reversal. We need to see price kind of come back up and see stocks kind of rebuild themselves in order for me to get excited about this, because right now it's just messy. So I'll be sharing this chart next week with you too, guys, but I want to see the 20-day moving average kind of work its way back up to 30. Will we miss some of the move? Sure, right? You also might have clean, well-defined risk if we get back above this 520 level, right? We get back above 520, that might be an area where if you've already been risk off since this 580, right, or since this break of 575, right, you've protected, 10, 11% downside. Maybe you swing the bat here and add some exposure, and then you have limited downside, right? Because you want to get back out if it's a fake out. Similar to this, right? Maybe you added risk against 560, but once we got that fake out, right, maybe you got back out of the market. So you can have those little losses instead of these big losses. So that's kind of how I think about some of this capitulation at the moment, how I'm kind of thinking through the market. Let's get into some of the chart requests that we have coming through. So first one that we have coming through is USO. I don't really have a stance on oil. Honestly, I don't, because I just think there's so many implications of the energy space in general, right? But I think this is the bottom end of that range, is this 63, 65 level when you zoom out. But it's been trading sideways for a long time. And this is, to me, this chart signifies to me a couple things. First thing it signifies is all the inflation worries that have been occurring weren't being confirmed by the market to a large degree, right? We had gold doing well, but energy is one of those areas of the market that tends to really solidify that, inflation is rearing its head back up. And I just don't think we were getting that, right? I don't think energy wasn't necessarily confirming that, energy wasn't confirming that inflation was rearing its head back up that significantly yet. And so that's where, once again, just focusing on price to a degree kind of kept you on the right side of maybe not rushing the energy breakout, because energy has been trading sideways for such a long period of time. So I'm going to actually share a chart relating to USO, right? So this is why I care about energy, right? So you guys can kind of see here, I'll focus on XLE versus USO, but I get Bruni Charting's point, right? Because this might be recessionary versus inflationary tariffs, right? Which I think would be a change, because that's why growth has been hit so hard in advance of this. But the reason I focus on energy for an inflationary perspective is the fact that energy correlates really well with yields, right? Energy is like the first derivative of inflation to a degree, right? When energy prices go up, transportation goes up, supply chain costs go up, right? And that kind of funnels into then everything else going up in price. And so energy just was trading sideways for a long period of time, and now it's having this down week, which tells me people are worried about growth, right? It tells me people are worried about a growth scare occurring, not inflation. And so that's where, right, people are talking about Powell and yields, and like the 10 year is going to tell him what to do, right? If the 10 year kind of breaks down here, I think that's kind of the signal that, hey, the Fed is being forced to lower rates, not wanting to lower rates. But the uncertainty around tariffs kind of puts the Fed in a tough spot. So I'm curious how this resolves. I'm not taking a stab at USO at the moment. I'm not taking a stab at any of these oil or energy charts, but I think it's an interesting point, right? It's making multi-year lows. I would say it's also because it's been trading in a range, right? So if this is a huge distribution pattern into a down leg, that could be tough, right? We could be talking recession, right? And recession, totally different playbook from, cyclical downtrend. Like recession, we're probably testing the 200 week on the S&P 500, right? Just a bear market, right, might go down 20%. Bear market plus recession, we're talking a lot more risk on the table to the downside, right? So that's where managing risk becomes important. But great points here by Bruni. Good chart to take a look at. I'll go over the Mag 7 now because I see a couple other names in the chart, but I'll kind of review the Mag 7 names because I know people in the chat are wanting to review some of these Mag 7 names. So let's kind of take a look at the Mag 7 here. I have a folder for them. And some of these charts are not going to be updated because I've been out of the market, right? And so that's just the reality of the situation. And I'll show you why I've kind of been out of the market relating to some of these charts, right? So Apple, let's start with the Apple, right? You guys can see my chart, right? Where do you think I got out? Or where do you think I got in, right? You see it, right? This was my level. So now it's in this no man's land. And my guess is as good as anybody's that when it will bottom, I don't know, right? When sellers stop selling, like there's your cliche, right? We're getting oversold again, but maybe wait till RSI flips back above 30 and wait until we establish something here, right? This 190 level, let's zoom out a little bit. But you can see on the zoomed in chart, it's a mess. Like I'm not touching this, but let's zoom out. We know Apple's gone up for a long time, over a long period of time. Okay, so yeah, Apple's kind of in this support zone here, right? When you zoom out on the chart, this area is huge for Apple, right? That's huge, right? That's in 2024 pivot highs, right? That's at late 2023 pivot highs. This 190-ish area is huge for Apple. So it needs to hold here, right? But if it does, right, we might get a candle like we got back here in August last year, right? We might get this quick bottom, but price will show it to us, right? We'll see that on that daily chart that we were highlighting. We'll see kind of price action kind of refirm here at this 205 level. So this 205, 206, right? Maybe we get this little scoop and score pattern, and that's where I would kind of be interested. But for now, no real interest in this Apple chart, right? Maybe something like this could occur, right? Which I'm not banking on it, right? This isn't my bet. But we could have that similar price action to what we had last year, right? Kind of here, right? Where it kind of bombs. But I would probably manage risk there against that 200 level. This is messy looking chart, but you'll live, right? This 205, 210. Then you get some clear risk, right? Your stinky bottom, right? Trying to pick bottoms, get you stinky fingers, so wear gloves, aka manage risk. But that's kind of where you could potentially see it. I would want to see that reversal there. So Apple, it's a mess, man. Right? RSI 50 kind of got rejected, kind of gave you heads up. But we've been out since 235. Another mess, right? Just talking about them collectively, right? So just looking at them collectively, MAGS is a great index ETF to do that. Looking at them collectively, right? They've been in a downtrend. This isn't anything new as of this year, right? This didn't start, like they've been correcting. This didn't start because of the tariffs. Like this is already corrected, right? And this is bearish price action, right? We had this continuation pattern, break to the downside. We saw this little bear pattern here, right? Break to the upside, get retested at 50, get rejected at the 200-day. Actually, a great time to go short. If you follow me on StockTwits or Twitter, I actually did. I went short against 50 here. It was via inverse ETF play, actually. It wasn't just shorting shares. I don't short shares, tend to use some inverse ETFs, but very quick trade. I actually got out before the tariff announcement, so I didn't collect this other 5, 6, 7, 8%. I collected like 5, 6%. But 50 is the level that we need to get back above, and that's a lot of repair, right? That's 17, 18% of upside here. So what you want to do is you want to zoom out on these types of charts now that we have this bad price action. So when in doubt, zoom out. You hear that. And that's not because you should just hold, but it's to look for longer term levels where price action is. So here, right, not a newer ETF, but that $40 level, right? If it can kind of hold that level, $40, that next round number, look for follow through to the upside. But for now, leave it alone. Meta, right? We've talked about this one before a lot. Actually, I have another chart in here for Meta, right? You guys can see my level, right? My level was 600. Big round number, right? We were testing it, right? I thought it might go, but RSI didn't get back above 50. The bulls didn't really ever take control again, and we corrected, right? And so, once again, we got to zoom out on this chart because there's no reason to be in this right now, right? From the shorter term perspective, you might be looking to add to your longer term holdings, right? But I don't know, man. Maybe it holds this 500 level. Looks like there's some price memory here, but just wait for these things to bottom. I'm not holding my breath. Amazon, another one, right? Tested that 200-day correction. All of these charts are very similar, right? We're having to zoom out to find the levels we want to manage risk against. And for Amazon, there's a kind of a big 10% window here between this 170 level and this 185 level that we might be able to firm up against. You guys can see it here if I zoom in. Right, that could kind of be the level we firm up against in something. Right, chat? I don't know what you guys think, but that would kind of be my level, right? Maybe we get this breakout, but yeah, I'm not sure it's going to hold. Avago, same thing, right? Broadcom, right? The eighth, I think it's the eighth of the Mag 7. It was the eighth largest. Probably not now, right? Berkshire's probably crept its way back up. But you saw the levels to get out, so why are you in, right? We had our levels to get out, right? Once again, have to zoom out, look at the longer time frame, and it's this 135, 140 area that people are going to have to manage even more risk against, or maybe wait for a bounce against. But I think that's hope at this point, right? Glass Joe hasn't been able to take any punches. This is a great chart here. So Berkshire Hathaway, this is what happens in bear markets. They come for the leaders and they slaughter them. And that's what they did, right? They came for the leader. This was the leader and crushed it, right? Berkshire Hathaway getting whacked, right? That means they're selling everything, right? When correlations come to 1, meaning all the stocks are going down, which I'll show you guys here in a sec, that's kind of a sign that we're probably getting close to capitulation. So here we go, right? This is S&P 500 one-day change. Correlations are 1, right? Everything here is down today, right? There's like 5 to 10 stocks that are positive. This is considered a 90% down day, right? So that's one of those things, right? Another feature of possible capitulation, but you don't know until you get follow through. So in the S&P 500 today, right, there's 485 stocks down, right? About 15, 20 up. So bad price action. And then we look at the 2-day, right? Same thing, right? Look at the 2-day. There's not a lot of stocks that are up over the past 2 days, right? Those correlations kind of glow to 1, which is getting us closer to that capitulation phase, because now people, the stuff they were holding on to, the defensive areas, they're holding up more, but they're selling everything. And that's when people are just kind of giving up. So the closer we get to that give up, the closer we get to that get back in part of the market. It might be some bad news over the weekend that leads to a green day, and then that green day leads to another green day, and then we get more bad news, but instead of making a new low, we make a higher low, right? That's how kind of the price action will kind of unfold. The other thing I'll show you here is up days, right? So this is the past 2 days. You can see the majority of the stocks are down 2 days in a row, right? So UNH is up 2 days, right? Healthcare, but it's kind of already gotten the crap kicked out of it, but not really pockets of strength. The only pocket here, right? Consumer staples, kind of neutral, right? You have some utilities, defensive names in general. So the selling doesn't seem done yet, but we are definitely getting closer to it. Like, this isn't where I would just be selling blindly, right? I would be looking for maybe a bottom and then a rip to sell into, because, right, you don't want to sell on these down days. You want to wait for it to kind of bottom. Maybe we get that rip, and then maybe you sell some into that rip because, right, if you haven't been out of the market yet, it's kind of a tough price action to kind of be involved with. But you see, there's not really pockets of strength. People that are telling you that are trying to sell you something, right? They're trying to get you to take trades, but like, what the hell is this? Like, what are you buying? Okay, I'm gonna buy UNH. Okay, UNH is showing some relative strength here, guys. Cool. You want to own this? Like, I don't see a setup here, right? Right at its 200 day. What's every other stock done? Gotten rejected at its 200 day, but this one's going to be the exception, right? Like, I don't get it. So I think you're better off just taking a chill pill, managing risk, and waiting for the market to kind of set back up again, which is going to take time. Which is just going to take some time. So let's take a look at a couple names in the chat here. We have ZIM. Let's take a look at ZIM and shipping company. Yeah, like, yeah. I don't know if you're asking me because you're looking for a level to get out or a level to get short, but I think it's too late for both. All right. I wouldn't be getting short this. I wouldn't be getting long this. I would just be chilling, right? Enjoy the fresh weather. I'll zoom in for you, kind of take a look. Yeah, man, this is completing the top. Like, this is a topping pattern. Right. I am not doing anything fancy here. Nothing you can't do at home. Topping pattern. Clean level here. Gave you some false hope. It might hold $15 and then follow through to the downside. So don't know what you want to do with that. Yeah. Just got to manage risk in those types of names. Got to manage risk. It's the name of the game right now. I'm not saying too much out here to be excited about just yet, but we are getting closer to capitulation. But like I said, price needs to kind of form up, and that might be something we're able to see. But for now, not the case. Let's take a look at SE. C Limited, right? Same thing, 16% down week. I don't know what to tell you, right? Maybe it finds support here at its 200 day. Not a bad look, right? Not a bad look. Maybe it finds support at its 200 day, but why you want to own stuff right now? Like, that's the question you should be asking yourself. Like, why are you looking for things to do in this type of environment? If you haven't already, like, if you're already out, why? Why rush it? On a Friday, right, with a president that says a lot of things, right? You don't have to love him. You can love him and admit he says a lot of stuff, right? You might tweet something crazy over the weekend, right? You might tweet something good. But why are you going to gamble that when the majority of stocks aren't doing well, right? Like, there's people smarter than us in the price action that's telling us to chill out and just wait. So I'm trusting that over just a hunch or over wanting to be a hero in this market, right? The whole reason you guys are in this chat is because you wanted to get better at this, right? You wanted to get better at this game. And this might not be the environment where we get better, right? This might not be the environment where we make money. And that's okay, right? You can go find someone else who tells you they make money in every single market environment. I'm not that guy. I think there's environments where it's fruitful and you have to be willing to take risk. And then there's environments where it's not and you have to be willing to take off risk. And we're in that take off risk environment, right? When it changes, I'll be here. I'll be here next week. We'll be talking through these charts. Right now, just that's not the case. So chat, we got any more tickers? If not, I will punt it back and we'll get out of here a little bit early on a Friday. So maybe that's something we do. SE, because I've been holding since 33. Mr. Tieno. Okay, on this SE chat. It's been holding since 33. Okay. Super fair point, right? So you've been in this name since 33 bucks, right? And now it's in a 28% correction, right? Maybe it holds here, right? And then you find this 200 day. But if you were trying to take some short-term risk off, it might have been against 120. But I think if it breaks this 200 day, you take some off, right? I think one thing we don't hear a lot about is incremental. Right, so you can take a little bit off when we hit this 200 day or break it. Maybe take half off and let half go. You don't have to do everything all at once, right? You can incrementally scale in and incrementally scale out of positions. So, but kudos to getting in at 33. It's impressive. It's impressive, right? 33 bucks. You got in here. Wow. Mr. Tieno got in at $33. I think you might be the best investor to ever live. That's pretty impressive. You bought right down here. I think there was one day it traded. So you bought January 16th, 2024. You got in the exact low. Dude, you need to be teaching this class, right? You need to be the one doing, reach out to StockTwits. They'll get you up here, right? You bought on the day it bottomed and now you're up, 2, 3, 400%. Why are you listening? Don't be listening to me, right? Seems like you know what you're doing, right? If you did that. So congrats. Yeah. Congrats on that. That's funny. Okay. All right, guys. That's kind of what I have today. I'll just end here, kind of sharing this piece of information, and then we'll get back to our weekend. So, right. I think just like you guys, right? I want it to be a capitulation event. I want it to be that, but price has stopped falling. We need to see follow through, and we need to take a punch without getting knocked back down. So until that happens, right, which it isn't all going to happen today, just chill out, right? Learn over this time, learn new ways to manage risk, learn some technical analysis. There's plenty of books. Reach out to me in my DMs on StockTwits or on Twitter to kind of understand the market. But we'll be here. We'll be here when it turns around. We'll be here when we get that capitulatory event. But I don't think we're there yet. I think we're getting closer. Maybe next week. So hopefully that's the case. And I'll see you guys next week. Be sure to check me out on Twitter at Hostile Charts. Check me out on StockTwits at Hostile Charts. I also write a beehive that goes out every Saturday. That's also Hostile Charts. And then I do a letter for Stock Market Media TV, Thompson 2 cents, right? So if you sign up for my beehive, you'll also get that. That comes out every Tuesday, Thursday. So cheers, guys. I really do appreciate the time. I hope you guys have a great weekend and manage risk responsibly.